Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar remains in a bearish outlook as it crushes at 73.60 support and recalls a 4-month trough at 73.27 overnight. Still remaining on the bearish highway, the market is expected to sink further and eventually take on that challenge of 73 figure 5 and look down towards an objective that I've highlighted here at 71.60.80. Now that being said, we should not discount fresh advances as the market most probably will be staging some take profit as this sell-off continues, but looking towards the downside, I still expect to see that pressure remain on 73 cents. Resistance on the day comes in at 73.75 and also higher around 74.20.25 as a cap. What has been keeping the Australian dollar weak is a couple of things. Is that the copper price has actually dropped to a near 5-month low. With the Australian being a commodity-based currency, would expect to see further pressure if this continues. Along with the Australian budget, Moody's gives the all clear for the Australian AAA credit rating to remain. That being said, I do expect to see prices worsen and still see follow on to the downside. Well, since the bearish outside range day for the euro, we've seen further follow on and now looking towards a target of 108.1525. With the dollar index, for some people, feeling a little bit relieved as the bulls continue on to rally, now challenging the top side of a 3-week high of 99.55. I do expect to see this pattern continue on to at least a target of 120, which in terms will see the euro fall through that 108.15 level, fill in the gap and look towards 107.30.45. Overnight, we did see the German industrial production decline to 0.4, which was better than forecast of negative 0.6. Also, we do have tonight. We have at 10 p.m. ECB President Mario Draghi to speak, which might impact on monetary policy at the Dutch House of Representatives in Netherlands. Well, dollar yen still maintaining its bullish stance, but still finding a bit of a trouble at the moment of getting through this resistance of 114.30 after printing a 31 high. With the current pullback that we've seen this morning reaching a low of 60, we could see further downside pressure, not bearish, but just more to a point of unwinding this overbought situation that we're in. The lows can be anywhere from 113.45 to 112.60.65 before the regain of momentum and take on the challenge to 114 to 115. As I mentioned, the base comes in around 112.60. Sterling still holding to a negative outlook, and any advances above 130 will still see as a bull trap. And I expect to see the supports eventually be taken out of 128.90 and look lower towards 127.45.60. The market still waits tonight for the tomorrow, for the Bank of England's monetary policy, which is expected to keep its rates at rock bottom around 0.25. So the market might be a little bit quiet in the next 24 hours, but still, overall, I expect to see this pattern continue on. And with this divergence coming in, I am nearly confirming a break to the downside. Look towards that 125 handle. Well, gold took on the downside, crushes at 12.24 support and recalls a low of 14 before rebounding $10 to 12.24 this morning. I'm still not bearish. I'm still a bit cautious of the fact that we could see a further rally up towards anywhere of 12.27 to 36 to 41. So be a little bit cautious if you are short. But I still like to play from the long side and eventually see the market rally. And also to wrap up with oil, the market's still bullish, even though it's contained at the moment from this 47.5 handle. Any pullbacks to be a potential buy, as I feel the market will eventually clear this level of $47.60 and look towards $49 as a potential target. That wraps up my daily video. Thank you for joining me. And as always, look out for the intraday report that will be released shortly.